Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Today, we're doing a deep dive into some really critical proof points we're seeing across the small cap markets. We're looking at environmental services, high-grade gold, and of course, battery metals. And our mission really is to get past the headlines and pull out the hard numbers, the actionable data that confirms a company is actually executing on its plan.
Exactly. And that's the key word, executing. We're seeing companies reach these really important turning points. They're either shifting to real financial discipline or they're turning exploration success into, genuine massive scale.
So the data is starting to do the talking.
It really is. This is where you want to start paying close attention.
Okay, let's jump right in. First up is the clean tech and environmental sector. We're seeing companies prove that you can have operational growth and it can translate directly to the bottom line. First on our list is Zefiro Methane Corporation. That's trading on the CBOE Canada, symbol ZEFI.
And ZEFIF on the OTCQB.
Right. The headline reads, Zefiro Methane posts record revenue as cost cuts drive strongest quarter to date. And the numbers back it up. Record revenue of $12.1 million for the quarter. That's a 21% jump over their previous record.
Which is solid growth, for sure. But the efficiency part of that headline is what really grabbed me.
Me too. Operating expenses fell sharply. They dropped from $4.4 million down to just $3.1 million US.
And look at the G&A, the general administrative costs.
Plummeted, down by about 47%.
That's not an accident. A drop like that, almost having your G&A while revenue is climbing, that signals a really deliberate strategic shift. They're laser focused on sustainable cash generation.
And it worked. It lived directly to profitability. They posted $665,401 US in earnings.
And that record quarterly EBITDA of $2.6 million US.
For our listeners, EBITDA, that's earnings before interest, taxes, depreciation, and amortization. It's often seen as a sort of pure look at a company's operating performance.
Precisely. And you can see that performance in their operations, too. They landed a second federally funded project in Ohio.
That's the one with the 37 orphan wells.
That's the one. These are old, abandoned wells just leaking methane into the atmosphere. But here's the other side of the business. They had their first public sale of methane reduction credits.
From Project 959, this represented 92,956 metric tons of reduced carbon dioxide.
A huge validation of their carbon credit monetization strategy.
Okay, but let me ask you this. The carbon credit market can be volatile. How much of that $2.6 million in EBITDA is, reliable field work versus a one-off credit sale?
That is the right question to be asking. And their model is built for that. It's diversified. The field services, plugging in the wells, that provides your steady, reliable revenue base.
And the credits are the upside.
The credits are the high margin upside.
Right.
And the CEO's guidance, it suggests this is just the beginning. He expects the next quarter to be one of their strongest ever. So it's not a one-time thing.
Okay, that dual revenue stream makes a lot of sense. Let's stick with environmental services and turn to Waste Energy Corp. Ticker is WAST on the OTCQB. The headline here, Waste Energy Corp posts third straight quarter of revenue growth as Midland facility nears commercial launch.
So another company at a turning point.
Absolutely. They've now hit their third straight quarter of revenue growth. And if you look at the balance sheet, total assets are up to $881,596.
A 48% jump just quarter over quarter.
While at the same time, liabilities fell by more than 14%.
So they're tightening the belt. This is classic preparation for a huge operational shift. You shed debt, you build assets, and you get ready to move from development stage to a commercial operator.
They're cleaning house before the big party.
That's a perfect way to put it.
And that party is their flagship facility in Midland, Texas. It's a 15-ton per day waste conversion system. They're saying it's nearing completion.
And that's the whole story. They're targeting meaningful, recurring revenue in early 2026. So the risk is shifting away from the balance sheet and onto pure execution at that one plant.
A very clear milestone for everyone to watch. All right, let's pivot now. We're moving from proving financial discipline to proving out geological scale. We're jumping into high-grade gold exploration.
And this is where the numbers get really exciting because they're coming straight out of the ground.
We're starting in Canada's famous Golden Triangle with Goliath Resources. That's GOEO on the TSXV.
And GOTRF on the OTCQB.
Headline, Goliath Resources expands high-grade gold discovery in Canada's Golden Triangle.
And the drill results from their Sherbet discovery are, well, they're the reason for that headline. This isn't just a small find. All signs point to a massive high-grade gold system.
The numbers are pretty incredible. We're looking at 10.25 grams per ton gold over 7.02 meters.
And that was inside an even wider 15-meter zone.
Right. And another hit of 13.38 grams per ton gold over 5.75 meters. For anyone new to this, anything over, say, 5 to 10 grams is generally considered very high grade.
But it's the consistency that just blows this wide open. They reported that 76% of all their 2025 drill holes hit visible gold.
So is 76% with visible gold really as unusual as it sounds?
Oh, absolutely. For a grassroots exploration project,
Yeah.
to see visible gold is rare. To see it in 3/4 of your drill holes, it's almost unheard of. It confirms the high-grade nature is spread throughout the system.
So it massively de-risks the project going forward.
Exactly. And they've now extended that high-grade corridor another 80 meters. It's now 580 meters long.
Yeah, and the best part,
It's still open. Management says they believe they're nowhere near the limits.
a huge statement. Okay, next up, Spanish Mountain Gold. Ticker is SPA on the TSXV.
And CAO-AUF on the OTCQB.
Headline: Spanish Mountain Gold extends higher grade zone at Orca Fault, strengthening development potential in British Columbia. This sounds more strategic.
It is. This is a great example of drilling for economics. They're not just looking for gold, they're looking for the right kind of gold.
Meaning wide, near-surface intercepts. They hit one hole with 107.50 meters, grading 0.68 grams per ton gold,
Which included a sweeter zone of 41 meters at almost a gram per ton.
and another hole with 68 meters at 0.71 grams per ton.
Now, for a big open pit project, which this is planned to be, hitting these wide zones close to the surface is absolutely critical. It improves what's called the stripping ratio.
So less waste rock you have to move to get to the valuable ore?
Exactly. Lower costs and much better cash flow in the early years of a potential mine. It makes the whole project more attractive to finance.
And that supports their timeline. They've extended this higher grade zone to over 300 meters, and they're aiming for a construction decision by or before 2027. Okay, one more in the gold space. Revital Gold in Utah, trading as RVG on the TSXV and RVLGF on the OTCQX. Headline: Revival Gold extends shallow gold mineralization at Mercer, reinforcing growth potential in Utah.
Another one focused on shallow, easy-to-mine oxide gold.
They hit 1.4 grams per ton gold over 44.2 meters. Another intercept was 1.0 gram per ton over 24.4 meters.
And with oxide gold, you want to see good leachability. Theirs is at 83%, which is very favorable.
But here's the kicker, the key detail from this release. This new mineralization. It was found outside the current pit shell from their preliminary economic assessment.
And that's the most important point. A
Yeah.
PEA, a preliminary economic assessment, is that first pass study that shows a project could be profitable.
So hitting gold outside of that plan means the project is already getting bigger.
Bigger and potentially much more valuable. Now, you have to connect this to the financial context. Revival Gold's 2025 PEA used a gold price assumption of just $2,175 per ounce.
Which is very conservative right now.
Very. The industry consensus for long-term planning is now closer to $3,000 an ounce. So if you're adding ounces outside the mine plan and the gold price assumption is that low, there's massive built-in financial leverage that the market might not be seeing yet.
That's a huge potential upside, a fantastic number for people to keep in mind. Okay, let's wrap up with a quick look at battery metals, because the lithium rush is absolutely on.
It sure is.
We're focusing on a major discovery from Brunswick Exploration in Quebec. That's BRW on the TSXV.
And BRWXF on the OTCQB.
The headline says it all. Brunswick Exploration expands lithium discovery with strong drill results in Quebec. Let's just talk about the scale of these numbers. Their first results from the Anataka main project are frankly spectacular. We're looking at 1.66% lithium oxide over 47.2 meters.
And that amazing intercept was contained within an even broader zone.
An immense zone. 1.31% lithium oxide over 120.7 meters.
Let's just pause on that. 120-meter wide intercept. That's wider than a city block is long. That is the kind of scale that confirms you have a truly massive lithium system on your hands.
They've traced it for 170 meters so far, and it's still open.
And with widths like that, over 100 meters, it means if this ever becomes a mine, your mining costs could be significantly lower. Again, a better stripping ratio, better economics.
Plus, they're finding other valuable metals, like 1.46% cesium oxide over over a meter.
Right. And the final data point you have to see is that all 6 of their initial drill holes hit mineralized pegmatites.
Awesome.
That kind of consistency is incredible. It's in a great neighborhood, too. The same structural corridor as Rio Tinto's Galaxy deposit. It just removes so much geological risk for all future drilling.
So when we connect all these dots,
Yeah.
what's the big picture? From Zefiro's profitability to Goliath's high-grade hits, the theme is clear. It's successful execution.
Quantifiable, positive data.
Yeah.
These companies are confirming scale, they're confirming financial discipline, they're confirming quality.
And that brings us right back to our final thought for today.
It does. We talked about Revival Gold and their PEA, assuming gold at, what was it, $2,175 an ounce.
Right.
So when you go and do your own research on these companies, you have to ask yourself, what is the real current value of this confirmed resource?
You have to consider the impact of today's commodity prices.
Exactly. Whether it's gold or lithium or even the value of verified carbon credits, like with Zefiro. What is that impact on profitability versus the often conservative base case they use in their public studies? The confirmed execution, that's your floor. But the current commodity price environment, that can raise the potential ceiling dramatically.
A fantastic point to end on. Take these specific numbers, dig into the symbols and results we talked about today. Until the next deep dive, happy researching.